One of the most obvious factors affecting the decision of an investor is the rate of return demonstrated by the investment fund over the span of its operation. It's best to choose a fund that has demonstrated stable growth in the value of its stock over an extended period of time, a year or more. A curve showing its rate of return over time should be smooth. Frequent and large fluctuations in rate of return suggest that the investment fund is unstable. Prices rise and fall over time in every country and in every stock market. And the beginning, end, and depth of these changes is not under the control of a manager. Classics in the field show that a wave never rises indefinitely. This is the normal market situation. However, consistently good results are a sign of a management company's professionalism. You must make sure that the assets of a fund are held by an independent depository who is responsible for checking that the net asset value has been correctly calculated, monitors the legality of transactions performed with the assets, and works exclusively in the interests of the investors. The larger the pool of historical data you have access to, the more accurate your analysis will be. Also, you can compare the actions of the fund, the strategy of the fund manager, with past actions and draw the appropriate conclusions. Therefore, the dynamics of a fund's profitability and the value of its certificates depends directly on two factors: the market behavior and the manager's professionalism. If an independent investor has no control over the former, he certainly has the ability to assess the latter. You can gauge a company's professionalism by looking at its rate of return, not just in an ascendant market, but especially in times of decline. You can't analyze and compare the rate of return for funds for a day, a week, or a quarter. The minimum period of time that an investor should use as a reference, even on a subconscious level, is at least a year. A year is the minimum amount of time in which a portfolio manager can really take some noticeable actions on the market. Of course, you can track the dynamics of the net asset value each day, but you should do this only in order to ascertain a concrete fact, such as I've become 1% richer.